All right, welcome to another episode. Today we're going to take a look at Goldman Sachs. And as we take a look at this stock, I want to share with you some insight on Goldman Sachs on the earnings report, because that's kind of what's going on and what's happening here on the sell-off. So we're going to go ahead and get started. Keep in mind, these are recommendations to buy, sell, trade, or do anything without understanding what you're doing, because there are risks. All right, let's check this out. As we go into Goldman Sachs earnings, this is basically what happened 3 hours ago or here. The shares are dropping. Normally, as interest rates and everything starts to skyrocket, typically the banks do well. So you're usually saying, okay, well, great. Now the banks should be doing well, but you're seeing this drop in Goldman Sachs. Okay. And you're seeing kind of movement. You also see or saw the same thing here with JP Morgan earnings here that we did not too long ago. So again, the shares are falling. So regardless of even if the stocks are supposed to do well, the expectation, just because they should do well, doesn't mean that they will do well from the earnings perspective, because the whole market tendency is to the downside. And when the market's tending to the downside, it'll suck all those down with it. So, you can't look at it from that perspective. Okay, so let's check this out. Let's look at JP Morgan real quick just to show you the context. So here was the kind of earnings boom drop and a continuation. So as we look at Goldman Sachs, I mean, they already were budgeting for it. They kind of knew. They were probably hedging their own positions or bets. Who knows? Anyway, and then now we're selling off. You can see the volume's got some major pressure. Now, let's take a look at this overall, though. I mean, come on. If you look at this stock on the longer time scale, here it is, released here around 1999, 2000s. Stock climbed, problems in the financial sector here, or a bubble in the housing. We had a huge breakout right there. Look, I mean, this stock from 2008, it got back to 2008 levels from 2020, had a huge breakout. So we were in that huge breakout period. Imagine that. We were in the huge breakout period during coronavirus. So here was that huge breakout period right here, broke out, came back to retest, still continued to power higher, and it got stretched. Like, what do you think? Look. And then here at the 150, this is your critical support level. So as we check this out, you're right there in that support level, and you've got right here resistance right at around that 400. So we got into this resistance. As we go into it, you could see we struggled. 1, 2, 3, there's 4, 5, a handful of times where it just kind of isolated there, and then we just kind of rolled over with the earnings. So that's kind of the issue right here right now with this stock, is that, remember, on the longer term scale, we've been going to the upside, and that's been fine, but we just got a little toppy right around that 420 level, 430. And that stock broke down. We also had some support at around 370, but it obviously broke that. You've got some support right now, even though it's tottering around 350. There's some support. So watch this level. If it can hold this, that could be pretty nice, because you're coming in right here, and that's coming in with a few data points where it could hold, but it is kind of the first day of earnings. With the first day of earnings, you always usually wait 3 to 5 days for earnings to digest. So I'm going to show you this again. Just so a little more clean for you right here. This is the line you're watching, because you've got support and resistance hitting. Problem is this volume. So watch out for that volume, because you're building some bearish volume here, and that's usually not a good sign. And right now you've got this 420 or so resistance. So the stock, really, when you look at it, you've got some sideways action and problems. The good news is earnings now out, so you don't have that news going out there and having those issues. But other than that, this stock is kind of holding up right here for now. But you're going to see, are we going to do the bounce and roll, or are we going to do the follow through like JP Morgan? And that could be the issue and problem. If we do get the bounce, you'll probably be sideways. Okay. If we continue moving lower here, or even a little bounce and then roll over, if we get below this 350 level, where can we go? So let's look at the kind of the 2-day. And you start looking, okay, so we've got some levels here, and we've got another level around 320. So I'd look for probably around 320. That was kind of where that last base was. So you're looking at around that 320 price level, because that's kind of where we're looking at, 315, 320. is kind of what I would start looking at. And it just depends on the magnitude and speed of the move, right? If the speed is fast, you'll probably break through faster. If the speed is slower, you might get some bounces in between. But typically in those cases, then bounces are to be shorted rather than to go long, because then they're kind of weak bounces. So that's what I would watch. Overall, the stock, if you look at it from a Fibonacci sequence, look at the lows here to the highs up here. As we check those levels, you're kind of looking right there. Look how it lines up right around that 300, right at around the 50% pullback from the swing low to the swing high. You're looking to a pullback of about 300, and that could happen. I mean, it could still bounce here, then continue, then you know you got some bounces in between, and that's kind of maybe where you'll find some more stability. But that also coincides with that swing point high, and also the 61.8 coincides with the swing point low. So those are some of those important levels, and that would be 275 and 302, 303, 305. Those are kind of the key levels that I would also watch if this continues to roll over and doesn't hold. That's if it cannot hold kind of this 350 level. I think you'll probably get at least a short-term bounce for now to fill this gap, because we do have this gap. But after that gap, what happens is a lot of traders are going to do, a lot of the active and good traders, what they'll do is they will go in, and when this bounces, it's called a bounce and fade. It'll bounce and they're going to start selling it off. So they're going to start being bearish on it, even for a short term. But that short term will lead to some acceleration on the sell side, and it'll, you know, they'll be shorting it for a trade for maybe just, you know, a couple weeks or a month, just for the trade. But that'll push that stock lower, and that's where the problems could continue to lie. And that's why you see those wave effects, because they'll hedge their bets for the shorter term, even if they might be long the stock, but for this period they might be short. So I could be short for this period, but I could be long the stock for the longer term holdings in their account. So let's say they got like 20,000 shares or something long, but they'll short, you know, whatever, in options or something like that. And that's where the shorter term could still continue lower, even though they're buying stocks on the longer term. So it's a weird dynamic. You got to think multidimensionally on this, but that's how it kind of works and operates. Anyways, hope that helps. Thank you so much for joining me. Hope you enjoyed the video. Feel free to check out some of the other videos I have available. And I will see you in the next update. Thanks again, and take care.